Nvidia, Korean supply chain diverged. All right, let's get right to it. The record KSPI high you're seeing, it's a complete mirage. A massive foreign exit from semiconductors into power infrastructure is revealing AI's new bottleneck, and it's happening just hours before Nvidia's earnings. Here's the shock number you need to see. 1.29 trillion Korean won. That's the net sell from foreign capital in a single session. Now, this isn't just market chatter. This is a deep structural signal, and it is the core conflict we're tracking into the US Open. And this is the paradox. The KOSPI index absolutely ripped past 6,000, a huge, historic, headline-grabbing peak. But this breakout happened at the exact same moment that the smartest capital was executing a massive withdrawal. This, right here, is a classic liquidity mirage. So what we have is a major signal conflict. On one hand, you've got a record-high index. On the other, a massive river of capital flowing out. Let's break down this fundamental disconnect. Look at this. On the left, the KOSPI index, which is really just an abstract signal, is hitting a record high. But on the right, you see the physical reality. 1.29 trillion won net sell by foreign investors. They're pulling liquidity to get defensive ahead of Nvidia. One is just a headline, the other is a footprint in the sand. Now, we know capital is never destroyed, it's only relocated. So the critical question is, where did that 1.29 trillion won actually go? Let's trace the capital mass and find out. And here it is. This is the rotation in plain sight. Money was pulled directly from computational assets. We're talking things like SK Hynix HBM3E chips, and it was injected straight into physical power infrastructure, like Doosan Enerbility's gas turbines. It's a direct move from bits to megawatts. This chart just confirms the flow. I mean, look at the signal activation in Hyundai Motor and Kia, up over 9 and 12%. Meanwhile, what's happening in the semiconductor sector? A clear negative flow. These mobility and infrastructure nodes were the canaries in the coal mine, signaling what was coming. This brings us to a fundamental law that governs this kind of market action: the conservation of supply chain mass. You have to understand that capital has actual weight. At market peaks, it doesn't just vanish into thin air. It is forced to relocate from saturated assets, like frontline tech, to the next emerging bottleneck in the supply chain. So if capital is moving to the next bottleneck, what is it? Well, this reveals the entire structural reason for this rotation. It's all about AI's new power problem. Think about it. The AI bottleneck isn't just about designing faster chips anymore. The primary constraint has now shifted to the physical world, the actual electricity and grid capacity needed to run the millions of GPUs coming online. Capital is now solving for power. And this timeline shows you exactly how that bottleneck transfers. Phase 1, capital floods the core tech, the chips. Phase 2, AI scales up, creating massive demand. And then, Phase 3, it hits a physical limit. The power grids just can't keep up. That forces us into Phase 4, where smart money has to rotate from compute to power to unlock the next stage of growth. That's why this is all happening right now. Okay, so the supply chain is giving us a clear signal that a rotation is on. But with Nvidia's earnings on deck, which guarantees volatility, how do we actually position for it? How do we use this information? Right, let's translate this Asian signal into a precise vector for the US Open. The analysis phase is now complete. It's time for execution. Remember the cardinal rule. Do not trade the headline. Trade the supply chain. This is the execution battle plan. From this point forward, it's command mode activated. Our primary asset is the NASDAQ 100. The key pivot is 24,800. If it breaks below, you execute a 20% tech reduction. Above, you monitor resistance at 25,200. For Nvidia itself, the line in the sand is 145. Below that, cut speculative positions. Above it, hold and watch the forward guidance. Watch that 24,800 level on the NASDAQ. This is the regime check. Bull case, it has to hold above on a closing basis. That confirms a rotation-led rally. The bear case, the trap, is a break below that level during trading hours. If that happens, it confirms a false breakout. Cancel all long tech positions immediately. Invalidate this entire plan if the market remains in a chop range. Do not force a trade. Remember, cash is a position. All right, final validation checklist. This is the pre-flight check before the market opens. Watch pre-market volume on Nvidia. Confirm our signal only if that volume aligns with the rotation into infrastructure. Invalidate the thesis if pre-market activity fights what we saw in the Asian session. And finally, monitor automakers like GM and Tesla for that spillover momentum. Log the result at 6:30 a.m. Eastern, no exceptions. This is the alpha you get from the Asia close, before New York even wakes up. You know where to find me for the next briefing.